Before you begin investing in cryptocurrency, you need to understand what crypto is, its vision, and its true potential. That way you'll gain a solid understanding of the value of crypto and why it's a great long-term investment. So think of cryptocurrency as digital money. It's just a medium used as an exchange for other assets. The main one most people have heard of is Bitcoin, but there are over 2,000 cryptocurrencies on the market. And later in this course, I'll run you through how to research and pick the best cryptocurrencies for you. Now, the key difference between offline currency and cryptocurrency is that crypto uses blockchain technology. Take Bitcoin, for example. Transactions are recorded instantaneously like a digital ledger. It's like a peer-to-peer network where every transaction is shared across the whole Bitcoin network. You have a global collection of computers using blockchain technology to jointly record every transaction. So there's no central authority, it's a joint network. And no one actually knows who really invented cryptocurrency, but we know of their persona. The first decentralized cryptocurrency, Bitcoin, was created in 2009 by someone called Satoshi Nakamoto. He's never revealed his true identity, and no one knows who he really is in real life. Now, cryptocurrency is a really visionary concept. It's about changing the future of money. A lot of people don't invest in crypto just to make money. Instead, they like the concept of Bitcoin and how it could potentially stop corruption in the future. And cryptocurrency is completely different to traditional currencies, and its concept is very innovative, as you're about to discover, from removing third-party influence to improving the speed of day-to-day transactions. There's a lot of benefits to it. There's also plenty of reasons why cryptocurrency could be a great alternative to offline currencies. So let me explain. One of the biggest reasons why crypto is such a great concept is that it's completely decentralized. Unlike traditional currencies, for example the USD, cryptocurrency isn't regulated by a central government. It's not controlled by a third party, so it's pretty much immune to political influence. Also, crypto avoids inflation. With most cryptocurrencies, there's only a limited amount produced. For example, there's an estimated 21 million bitcoins in circulation, with most of these being mined already. And to avoid inflation, Bitcoin can't be reprinted or created again like traditional currencies. Also, most cryptocurrencies are basically decentralized, meaning their value is dictated by the market rather than by a third-party bank, government, or company. This is about putting power back into the hands of consumers and giving you complete control of what you can do with your money. Cryptocurrency was actually invented after the 2008 market crash, when banks limited residents of Greece to withdrawing about €50 a day. With cryptocurrency, once a payment has been sent, no one can reverse it. That means users protect themselves from double spending fraud. For example, any transaction issued with Bitcoin cannot be reversed. They can only be refunded by the person receiving the funds. Also, when you send a cryptocurrency payment, the address you send it to won't reveal that person's real-world identity. So someone's cryptocurrency payments and spending history can remain completely anonymous as long as you don't reveal your wallet address. Of course, cryptocurrency isn't perfect, and there are some key disadvantages you need to be aware of too before you make any investments. So here's a few of the biggest drawbacks to cryptocurrency. First of all, it's no secret that cryptocurrency prices are incredibly volatile. Take a look at any Bitcoin chart over a few months, and you see that prices fluctuate on a daily, if not hourly basis. You need to be confident in your investment decisions, which is what I'm going to teach you in this course. Also, the cryptocurrency market is still in its infancy, and it's therefore really hard to make accurate predictions about the future of cryptocurrencies. They have potential, but no one knows how far they will go. Now, things like negative media and news reports about cryptocurrencies regularly cause the market to crash, and quite often these media reports are based on over-exaggerations or speculation. And with the potential auditing problems cryptocurrencies have, a lot of governments are against the idea of adopting cryptocurrencies as mainstream currencies. Because cryptocurrencies are so decentralized, they remove the need for banks and third parties, they're also seen as a threat too. And crypto trading is an emotionally draining game. You need to be a confident investor. You need to be prepared to be patient, wait out your investments, and handle the dips, at least for a short while until markets rise again. Hodling works, but you need to be able to handle the swings. You should also understand that investments are very temperamental. Last year, for example, China banned ICOs for Ethereum, which is basically a way of crowdfunding new cryptocurrencies. And as a result, the price of Bitcoin plummeted by $1,000 within a matter of hours, showing just how unstable the market is. A little bad press has the power to send the price of coins sky high or crashing down to rock bottom. Finally, please understand that cryptocurrency isn't a get-rich-quick scheme. So many beginners are lured in by the huge profits crypto offers, but many lose out by buying in at all-time highs, only to panic sell if the market dips. So if you're new to the game, it's better to see cryptocurrency investing as a long-term earner, suitable mainly for those willing to sit on their investments for a while. It's extremely profitable, but it also takes a little patience too. World will tell you that no investment comes without risk. That's just the way investing is. If something is too good to be true, it usually is. And no matter how experienced or confident an expert claims they are, no one can predict what the future will hold for any investment, whether that's a stock, a share, or cryptocurrency. And you really have to understand this before you put any money into crypto. So the question of whether you should invest in cryptocurrency or not depends on your personal situation. And what works for one person might not work for another. Now, as a general rule of thumb, you should never invest any money that you aren't prepared to lose, because your investments could disappear overnight almost, and there's no guarantees here. And that way, whatever happens, even if you lost everything, you wouldn't have to change your lifestyle or worry about that currency. And this is the golden rule for whatever you invest. What I will say is that some of the best cryptocurrency traders I've met have certain personality traits that make them a great trader. And I know this diagram lists Forex personality traits, but your success in cryptocurrency is dependent on the same factors too, because investing has such a huge correlation with your mindset. You need to have the right mentality. So here's a few things to consider when you're deciding if you should invest in cryptocurrency, and I'm going to cover a few of them right now. So number one, are you willing to analyze and learn from your mistakes? Because the only way to get better at investing in cryptocurrency is by learning. You have to understand where you went wrong, what mistakes you made, and how you can improve next time. And some people just aren't willing to go through this process. They're only in crypto for the quick money. And I'd say that's actually the wrong mindset, because you have to adapt and improve from hours and hours of practice. And the real winners of crypto long term will be the ones who look at the mistakes and analyze how they can improve next time. And number two, do you have a positive mindset? So when it comes to investing in cryptocurrency, you should be a realist, basically. You've got to be able to see opportunities and the potential of cryptocurrency beyond the weekly highs and lows of the market. Because, you shouldn't be overly optimistic or outrageously negative either. Your mindset should be somewhere in the middle of both. Number three, how competitive and self-driven are you? Because investing in cryptocurrency is undeniably competitive, because you're trying to hustle your way to profits. When you buy, you're basically telling the market that you believe that cryptocurrency is undervalued and it's worth more than the person selling it. And on a macro scale, other crypto traders are your competition. They're battling against you to see who can buy and sell for the best prices and therefore make a profit in the long run. So if you're competitive and you're driven by competition, cryptocurrency trading might really appeal to you because you love the hustle of trading. So what are the advantages of investing in cryptocurrency? Well, you don't need any experience. Investing in crypto requires little to zero experience, and yet it's still hugely profitable. And it's not too late yet. The world of crypto is just getting started, and this is still an emerging technology. And also, you don't have to invest everything you own. You can invest in crypto with as little as $50 or $100. So if you just want to test the water, you don't have to worry about investing everything. However, you have to be aware that cryptocurrency is extremely volatile. So if you take a look at any Bitcoin chart over the few months, you'll see that the prices fluctuate on a daily, if not hourly basis. It's also very unpredictable. The cryptocurrency market is still in its infancy, and it's therefore really hard to make accurate decisions about the future of crypto. They have potential, but no one really knows how far they'll go. And finally, cryptocurrency isn't a get-rich scheme, no matter what everyone else thinks. So many beginners are lured in by the huge profits cryptocurrency offers, but many lose out by buying in at all-time highs, only to panic sell if the market dips. So if you're new to the game, it's better to see cryptocurrency investing as a long-term earner. You should be willing to sit on your investments for a while if you need to. Now, I know stocks are a really popular investment option too, but you have to be a little bit more patient with this option. So cryptocurrencies are more volatile than stocks, and therefore there's more opportunities for bigger profits. And also, altcoins aren't regulated, so they're decentralized, and whereas stocks have to follow much more regulations and legal constraints. And finally, cryptocurrencies typically have a limited number of tokens, so there's around 21 million bitcoins, whereas stocks can often be reissued to the market, and stocks are more mainstream and easier to invest in than altcoins. So it's just a few things to consider if you're looking at alternative investment options. Okay, so should you invest in cryptocurrency or not? Well, there's no doubt that cryptocurrencies have a bright future ahead of them, but it's also very risky and it's a volatile market that fluctuates often. So if you like taking risks, you're driven, you're confident in your decisions, then I'd say it's definitely worth checking out crypto as an investment option.